Thank you everyone for joining us for our 12th speaker series session, Food for Thought. We're glad to have and thrilled to have Professor Rob Walsh and our distinguished panelists. As usual, if you would please wait until the end for the Q&A session. We'll leave about 15 to 20 minutes for Q&A. So at the bottom left, it says participants. You can raise your hand. You can also put questions in the chat. And now I'll hand it off to Bill to do the intro for Professor Walsh. Thank you everyone for joining us.
Well, let me thank everyone, Rob, the panel, and all our attendees for sticking with us over the last few months. We've become hopefully a regular lunchtime feature for a lot of us, certainly for me. And today's panel will be really exciting, I think. I'll let Rob introduce each one of his panelists, but I'll introduce him as someone that I've known for decades through New York City and New York State government, and now we teach together at the Picker Center here at Columbia. Rob is, been an innovator in economic development in New York City and around the country, he was, I think, without argument, the greatest commissioner of small business services in New York's history. A job that was historically, for the older of us would know, kind of a patronage haven that didn't really do anything, to one of the most successful and meaningful agencies in New York City. So he's a tremendous manager, a great innovator. The whole idea of public-private partnerships in cities, he's brought to the world, in part through us, when he brought the idea to the Republic of Georgia, of all places, the home of Stalin. I'm sure when Rob stepped off the plane, Stalin's grave was rumbling under the ground as he brought capitalism to the home of one of the worst dictators in all history. So Rob worked his magic in North Carolina, but most particularly here in New York City. And the whole idea of bringing the private sector and engaging them with government and with the public. For me personally, it's a real illustration of social value investing, the book that I wrote with Howard Buffett. Which one of the key elements of it is engaging the community in programs to help the community. And Rob institutionalized that. Business improvement districts are a world phenomenon, primarily due to him. So thank you so much for joining us. Thank you to everyone. And Rob, I'll turn the show over to you.
Well, thank you, Bill, and to Jeremy, thank you for organizing this. And to Bill, I think one of the worst kept secrets in city government is when I needed talent, when I needed fantastic staff, deputy commissioners, assistant commissioners to run through the agency, I had a hotline to Columbia's SEPA. So I guess the word is out now because, through the 12 years that I served in the Bloomberg administration, I think there was a real direct line up to Columbia to get talent. And I could name, people after, Michael Borden and Jessica Taylor and so many other people that were proteges of Bill and some of the others who are online today. And it's a real honor for me to be part of Columbia SEPA now. And I really excited about today. I'm excited about today because of the guests that we have lined up today. These are folks who are the heart and soul of New York City, and I'll introduce them in a second. But I want to frame this out a bit. The pandemic obviously is front and center for all of us, and today we'll hear from a number of individuals and get a dialogue going, getting some of their experiences, some of their insights as we approach this crisis and the aftermath from all angles. I'm very looking forward, Jeremy, to a lively, substantive conversation. These leaders all have worked hard in rebuilding their businesses, their communities, helping small businesses. I think of the work that Randy and Lisa have done in helping small businesses with loans and grants and navigate through the maze of bureaucracy. We have a longtime small business owner, an award-winning small business owner who can give his perspective. But before I introduce the panelists, I just want to give a little bit of a background. You know, it was back in March when the Payroll Protection Program was created with a great deal of fanfare and a great deal of debate. Congress allocated $349 billion to PPP as part of a $2 trillion stimulus package. And PPP was an entirely new program, and this is important for us to understand, for the SBA. The purpose was to provide forgivable loans to small businesses as they grappled with social distancing measures, something we never had to do in the past. We went around and knocked on doors, and you know, the SBA and the city and state, you know, looking to see if we could help. In this case, we had many of them shuttered or reduced services. Michael Roth, one of our panelists and an expert in finance, noted back in March to me that this was unprecedented, that this on such a large scale, far greater than anything else that the SBA has ever administered. And he'll speak more to that point. We'll hear from Randy Piers of the Brooklyn Chamber and Lisa Soren from the Bronx Chamber about how these funds were not sufficient to meet the demands, particularly in many of the corners of our city, the poorer neighborhoods of our city, leaving hundreds of thousands of small businesses waiting, many of them shutting their doors for good. We'll hear about the shortage of funds. Not only that the shortage of funds weren't the only issue, but there was confusion over rules. Many banks sat on the sidelines in those first early days because they were confused about the rules, you know, that Washington provided. There were tech delays, systems crashed, access problems, a heavy reliance on traditional banks and not enough on some of the community banks. And of course, some loopholes that we've read about where public traded companies whose financial troubles had nothing to do at all with the coronavirus issues were able to benefit from that, while many, particularly minority-owned businesses, were denied loans, even when they went in for thousands of dollars. And again, our panelists today will be able to shed some light on that. After the first round of funds, and those funds went out quickly, there were some improvements that were made, and our panelists will be able to shed some light on that. As the Democrats and the Republicans debated over the size and the scope and other issues. And then we fast forward, we saw some changes to the program that gave a little bit of flexibility, and I'll be asking Ken Gidden to shed some light on that. Did it make a difference? A question for the panel later on is how many of these small businesses could have been saved? How many of them could have been saved if they got access up front? If they, many of them didn't make it because they simply did not have cash on hand. Bill, to me, this seems all to be a great conversation, not only today, but for us in leading a case study later on this issue. Federal, state, local government, community-based organizations, all interacting in dealing with a crisis. Now let me introduce the speakers. I'll first introduce Lisa Soren, who is represented by a logo, that Bronx Chamber of Commerce logo. She is the president of the Bronx Chamber, an organization she's been involved with for over 15 years. I met her when she was the founding director of the Business Improvement District at Westchester Square, where she did an extraordinary job. Now she has been building an organization in the Bronx to serve small businesses. Randy Piers, it's been a homecoming for Randy Piers. He's now the president of the Brooklyn Chamber for the past year, but he helped build this organization back in 2002 through 2006 when he was the vice president of economic development. If you look at his background, he's also run a very successful nonprofit organization and the Opportunities for a Better Tomorrow. He's been active in the community as chair of his local community board in Sunset Park. Michael Roth managing partner, leading strategy, partnerships, and products at Next Street. What is Next Street? Next Street is an organization that is determined to get more capital out through public and private entities into our neighborhoods. And they're active not only here in New York City, but across the country. And Michael has had a passion for building partnerships, supporting small businesses, and driving business development. And you look at his background, he's worked at IBM, he's worked with a number of nonprofits, one being Rising Tide Community Loan Fund, and he continues to work to get money into the hands of small businesses. And finally, Ken Gidden. A great story about Ken Gidden that I love to tell is that he was trading bonds in Boston, and he was about to head to MIT, and his parents called him and said, you know, Grandpa is sick and ailing, and we need you to go down and liquidate the store. Well, he did liquidate the store, but he also caught the bug, and he saw an opportunity to be an entrepreneur and to rebuild Rothmans. And he rebuilt Rothmans into one of the award-winning small businesses in this country, one of the surviving independent stores of its kind in New York City. He and his brother have expanded. He could talk more about that. But Ken is also someone who has given back to this city. He is the co-founder of New York Cares, and he was one of the pivotal people in the rebuilding of Union Square, where I met him back in the late 80s, where he helped rebuild Union Square. I want to start by turning to Michael Roth to set the stage with some slides that will give people a perspective of a much deeper on the impact of PPP on underserved communities, the gaps that remain, comparisons to other cities, and a very quick analysis before I bring in some of the other panelists. Michael?
Thanks, Rob. Okay, can everyone see my screen?
Yes.
Thanks. I can't see anybody else, so the verbal is helpful. And it's really a pleasure to be here, and thanks for inviting me into this lunch, and thanks for the introduction, Rob. I hope that one day Next Street gets to the place that all I need, like Lisa, is the logo, and everybody will know what that is. So I'm going to quickly go through a few slides that I think set the stage a little bit. I'm going to show a bunch of data, but really all you need to know is these three things that are here, which is the state of the small business ecosystem had a ton of inequities before March 15th, and COVID-19 just put a microscope on the challenges that already existed. The second thing is that the flawed SBA delivery system made it inevitable, all of the challenges that we've had and that we'll absolutely talk through. And by the time that they worked to fix these things, it was already too late. And the third thing is that this is a journey, and PPP was a relief part of this. But this is really about, as everybody on this call knows and feels, it's about transforming the small business ecosystem and the New York City economy into something that is more equitable. We have an opportunity right now to meet, again, another urgent capital need for small businesses across New York City. So the first thing, this is data from before COVID. And I just want to point you to the bottom left of this very, very busy slide that shows the median cash buffer days by business owner rate. And you can see majority Hispanic, 90%, majority Hispanic owned businesses, 90% of those businesses had less than 14 days cash on hand before COVID-19. Majority Black owned businesses had 95% of those businesses had less than 14 days cash on hand before COVID-19. Majority white owned businesses, it's just 29%. That is a stark difference between white-owned businesses and business owners of color. And that was headed into the pandemic. On this slide, the most important thing is Rob went through the PPP program a bit. It is an innovative program that has never been done before, but one thing that remained the same from existing SBA programs to PPP was the delivery system. The SBA uses banks to deliver existing products to small businesses, and they use those exact same banks to deliver PPP to small businesses right after COVID-19. And historically, you look at the data, and this is the SBA who is trying to serve the unbankable businesses who can't be served, and only 5% of SBA historical approvals, this is not PPP, historical approvals were received by Black business owners, and only 9% of historic SBA 7A approvals are for Hispanic-owned businesses. And so that same exact delivery system that was delivering PPP to those small businesses already had this track record. And so it's no surprise the disproportionate effect it had on business owners of color. Very importantly, this money ran out in 13 days. There was a second round of PPP, which came out a month later. It fixed some of these delivery system issues, but I take you back to this slide and say 95% of Black-owned businesses only had 14 days. And so it was 6 or 7. Sorry, Rob, were you trying to jump in?
No, go on.
No.
I'll try to behave.
So it's 6 or 7 weeks later when these businesses only had 14 days. And so PPP round 2 was already too late. This is just another look, instead of by race, historic SBA data in New York City by income, and only about 3% historically, those SBA loans got into low income neighborhoods. And I suspect that we see the exact same things with PPP, and you'll see disproportionate recovery because of that. This data shows the New York City small business capital landscape before COVID-19. New York City obviously is home to a ton of finance, but in terms of small business lending, it's actually lagging behind its competitors. And importantly, SBA lending is only around 600 million in New York City for its 237,000 small businesses, when LA, which has a similar number, has about 70% more SBA lending. Same thing with CDFI lending, only $26 million of CDFI lending annually across all of New York City before COVID-19. And so the infrastructure in New York City to reach small businesses actually was not here. And so it's not at all surprising that when you look at PPP loans as percent of eligible payroll across the country, New York ranks dead last, 50th in the country out of 50 states. Only 23% of eligible payroll in New York was fulfilled by PPP. And when you look on the right side by borough, you see the uneven response here. In Manhattan, 18% of businesses got PPP, which is low, but it's not nearly as low as the Bronx. 6.92% businesses received PPP. Queens, 9.47%. Staten Island, 11%. Brooklyn, 11%. So you can see just in these numbers how disproportionate the distribution of PPP was. And very interestingly, and I suspect very purposefully, PPP is the first SBA program in a long time that did not collect any data on business race. So there's no way that we can break down PPP by business owner race, unlike what we can do on other products. And I suspect that they understood exactly what I'm describing would happen, and so they restricted us from getting that data. When looking at businesses, there are really 3 segments of businesses through COVID-19. Those who are the hardest hit, how do I stay in business, the ones that are impacted but surviving, and the ones that are insulated and are thinking about growth. This chart just shows the breakdown in industries by race, by ethnicity, and by gender of who was the hardest hit. And you can clearly see here on the left, Black-owned businesses, almost 40% of Black-owned businesses were the hardest hit compared to 20% of white-owned businesses. Asian-owned businesses, actually the worst hit. You had over 60% of Asian-owned businesses who were either the hardest hit or impacted but surviving. So again, the disproportionate effects of COVID-19. And what you see is exactly what you'd expect, which is 41% of Black-owned businesses were inactive and closed in April, compared to just 17% of white-owned businesses. And so just wrapping here, this is a long-term game. What's happened in the last 3 months, it's happened. There's a lot of lessons learned. We'll talk about them today, but we're currently rebuilding the economy. And we can put together strategies and programs that rebuild small businesses in a way that actually makes them stronger than they were before. And I want to actually start at the bottom here. You have a ton of Black-owned small businesses that have closed, but amazingly, across the United States, last month was the most new small business starts in the history of the United States. 80%, up 80% year over year. There's a huge need for startup capital right now. We project across New York City today, there's a need of about $300 to $700 million in startup capital, including for business owners of color, $123 million to $287 million in startup capital. And we know the challenges of business owners of color getting that access to equity. So it's just a call to action for the city, for people who really care, right? We saw 41% of Black-owned businesses are closed. That is a major wealth driver. If the city sees all its diverse small business owners close, and the people who have the most access to capital in the near term, white-owned businesses, open and take those spots, you're just going to see increases in wealth inequality come from that. And so the time, again, is now to act, to rebuild the economy, to something that is more equitable and more reflective of who New York City is and what it should have been the whole time.
Great. Reactions? Thank you, Michael. Well, what an overview, and what a chilling overview in many ways. And I want to get back to the delivery systems because the folks at the chamber, both Lisa and Randy, face this right up front, you know. And Randy, maybe you could start at the beginning when we, you know, does this make sense to you based on what you have seen? And you have been out there, you've been walking, you know, many of the neighborhoods, visiting many of the small businesses. Does this resonate with you?
It certainly does. You know, we started tracking data in April. We've done monthly surveys with our small businesses. Now, to be fair in terms of the data, and I'll pull up a summary sheet from May, the businesses that would generally respond to our surveys are the ones that are chamber members, that are relatively engaged, and at that point in time, we're sort of still in business, right? So some of the businesses that may have already closed or shut down weren't the ones that were really going to respond to a survey. So that's the little bit of a disclaimer there. I mean, I don't disagree with what was just presented. I would only say that there's some positive parts to the story, you know, that I think it's important to highlight, right? So let me first pull up my data set here. And this is just from our May survey, which in essence represents a lot of information collected in April and May. Oh, sorry, that's the wrong one. My bad. get the other one up. Here it is. So we can see that, oh, sorry, wait a minute. Stand by, sorry about this, Rob.
Okay.
There we are. Can we see that? Does it say round 2 stimulus? Does everyone see that on their screen? Okay. Does everyone see that?
Okay.
Yeah. I mean, so I think it's important to point out that there was really 2 rounds of funding that happened actually before Congress amended the program. And when they amended the program, that became a usage sort of issue versus an access issue. So I kind of distinguished the data between access and then was it actually something that businesses could use? I think Michael's point about, was it too little, too late, is a good one. But you could see in terms of round 1, which was that first round in April, which kind of shut down just 2 weeks after, and this is Brooklyn data, Brooklyn business data. Only 4% had received funding for the PPP program. By round 2, 92% overall, but only 67% MWBEs. Now, what had changed in that second round? Well, there were some significant changes. The first was the CDFIs in New York City were able to lend. There's some really good ones. I saw Brian Gursky on the call before from True Fund. They're a partner of ours, Pursuit Lending, Accion. I mean, these are the ones that traditionally work with MWBE firms. So access from their perspective, increasing their access was important. Fintechs got involved as well. That's that other category where it says lending institution. So whether you're talking about Cabbage, whether you're talking about PayPal, whether you're talking about Square, I mean, these companies got in the game and a lot of them already had relationships with small businesses. So that was important. There were some middle tier banks like Investors Bank that have a presence here that were not SBA lenders previously. And they got qualified by the second round. So they got involved in the game. And then the last thing, the large banks had gotten some bad publicity from round 1, rightfully so, many of which had favored larger account holders, those with existing sort of loans, and those with large payrolls. By round 2, they sort of got the message that they needed to be a little bit more responsive to the small business community. So things did change sort of midstream. And from our perspective, that's a positive point of the story. Also, the community banks did better throughout the process, right? So in Brooklyn Dime Community Bank, Empire State Bank, once again, the ones that seem to be closer to the ground, the ones that seem to have better sort of retail relationships with small businesses, were the ones that did better in the process. Now, that being said, was the PPP program the right structure for small businesses here in New York City? Probably not as much as the SBA or the federal government would like you to believe. I mean, before the Congress sort of amended the program to make it much more usable for places like New York, I mean, the reality was, when the program started in April, all our businesses were shut down and there was no timetable for reopening, right? So it wasn't like now where we've gone through 4 phases of reopening and businesses are in all different places with respect to that reopening. But in the beginning, you could have applied for a PPP, gotten a PPP, and then what, right? I mean, you had 8 weeks to use it. You brought people back on payroll, and this is a really a not good part of the story, but you brought people back on payroll only to kind of lay them off again, which didn't make a lot of sense because once you've exhausted the funds, you still couldn't reopen. So, the timing wasn't right from New York City's perspective. The other thing is the issue of the amount of funding in the beginning, only 25% that could be used for non-payroll purposes, right? So that included rent. And rent was a big issue here in New York City, high rent.
We're going to get that perspective from Ken.
Okay, so we'll skip on that. But these were some of the things that did ultimately change to make it a much more attractive and a much more user-friendly program. But for a lot of our businesses, the ones that had already closed down, it was too little, too late. The only other thing
that piece about, and I think you're being kind to the SBA in a way, and a true diplomat. You know, if they had a better delivery system, they had the data that their reach into inner cities, into Black, into Hispanic, communities from past experience wasn't a good experience. So by the time you got to round 2, many of those places had closed their doors. So they couldn't take it. You basically, I hate to say this, washed them out. They were gone. The cash on hand was gone.
Yeah.
Let me bring Lisa in for a moment to speak about the Bronx experience. Michael put some eye-opening numbers in about the Bronx, and then Randy will get you back into this. Lisa, are you there?
I am here. Good morning. I apologize. My camera's not working.
That's okay.
So I'm hoping everybody can hear me. So I have a lot of the same information as Randy. I mean, I think the story goes across the entire city. Now, we did a survey. Let me see if I can. This is my new thing here. So bear with me one second. Hold on. So we did a survey in July, and it's a really in-depth survey. I know that some of my other colleagues in the boroughs have been doing, but we were kind of struck with the thought that how few of our businesses were getting funding. Hold on, let's see here. So our survey covered a lot of various industries and the ones that responded. So the numbers are a little off. Some people actually didn't even want to identify their industry. But more or less this covers the Bronx, because keep in mind, the Bronx's business are very mom and pop. We don't have a lot of large institutions. So our corridors really are about 20 or 10 under employees. As a PPP, I try to get fancy with the PowerPoint, ignore everything. So at the PPP level, we got approximately 50%. Now this is including round 1 and 2. Denied, the number was at around 23%. And those that received less than what they actually needed was 26%. When we moved into the other type of programs, the numbers got a little better as far as what they were receiving. The New York Forward loan, which is now starting to come in, is what we're working with. It's about the only one that has a lot more flexibility. The downside is it's at around 3% interest rate. And so our businesses are wary. Where I'm finding the Hispanic population of businesses, this is the loan they're going for, because the PPP loan, in the first round, we received calls from businesses that didn't know what to do. They took the loan, brought their employees back to Randy's point, and had to let them go again. And what they found is they ended up, they're concerned about what the reimbursement will be because they were in a hurry of getting their employees back. In the second round, it got a little better, but because things were still unknown, especially the hospitality industry where you're still not allowed to bring people in. The outside, I find that a lot of minority, actually we were at around 82% of our minority businesses still has not gotten or understood the outdoor eating and how to maintain the regulations, because they continuously change. We have had a large amount of our businesses in the Bronx in the hospitality industry have their licenses suspended, which I actually sent a letter about the fact that I find our minority industries are being targeted with the outdoor eating. Bank loans.
Let's move on the capital, because I want to get to the questions. Yeah.
Sure. So this is where we're at right now. This is where our businesses are as far as need. rent and cash subsidies, and insurance numbers are starting to increase. So, hold on. Bear with me, sorry. So all to say is that what we have are a huge disparity in our businesses, a massive disparity in our businesses. We're now refocusing our efforts and getting into communities that do not have access to understanding any of this to this date. And we're still looking at around 9,500 businesses only that receive PPP through both round 1 and 2, which is,
Lisa,
yes.
Lisa, before I shift to Ken Gidden, who could give a small business owner's perspective, you talked about the state's program, and you're saying that a number of Hispanic companies have been able to tap into that program, giving its flexibility. The city also took a shot early on with I'll call it a bridge program. Could you share with the group here what the experience was with that?
It was very eye-opening. The Bronx received, at the beginning, 1% of the entire loan. It went up to 3%, and you know, there was
1% of what?
I believe it was in the, please correct me, over $20 million.
So $20 million, 1% of that program
Went into the Bronx. That's correct.
Right.
And you're seeing that with all with the federal programming. You're seeing it with some of the state, and now the state is trying to really shift how they're allowing businesses to be able to succeed in getting their loans and or grants.
Well, you talk about a need to improve the delivery system. It's right there. Ken Gidden, a small business owner, told me that she was one of the fortunate ones. She got a PPP loan. She hired 28 employees that were laid off in March as the crisis set in. But for the loan to be forgivable, the business had to spend the money in 2 months and mostly on payroll. Did you receive a PPP? And what were your approaches on this front?
So we did receive the PPP loan. We got it fairly quickly, actually. And I think only because the bank was next door to us, and we happen to know the people. But, you know, small business banking in New York City is kind of, you know, it's a thing that people advertise. But I've been in business for, I think, 34 years, and I am not someone that finds it very easy to get any kind of help from a bank, much less even talk to somebody. So it's kind of funny. So we were actually surprised that we were able to get the PPP loan. You know, just like everyone else who received the money. So we got the money, and then we were told, well, you have 8 weeks to use it up and bring all your people back. But not only were we not going to be open, we received the money on April 17th. We had closed on March 17th, and then we had 8 weeks to use it up to fulfill the 75-25 rule, 75% to payroll and 25% to others. So we got this money and we're like, well, what do we do? And then on top of that, we were looted. So we weren't going to reopen for a while. So our approach was, we can't make this work by bringing people back. It's just, we looked at the PPP loan as a cushion, and we held the money. And even in spite of the advice that you had to use it up, we held on to it. And that's actually worked out reasonably well. We're still not open in my New York City store. I have 2 stores in the suburbs that are only like 25% of my business. But as I understand it, when the bill was crafted, the PPP loan did not have this 75-25 rule. And then it was added on by the Department of Treasury. It's never made sense, especially for New York businesses, because people, you can reduce your payroll levels, but you're stuck with your rent levels. So you needed this money to pay your rent. And we sort of rolled the dice and said, we're going to take our chances and not spend it all. What we did was we tried to find things like, we found an amazing woman who had been furloughed from a e-commerce job, and we put her on our payroll, used her to help build up our e-com business. So we did a few things like that. And at this point, we've used up the money. We have very little left, and we're still not open. So now it comes down to, what do we do for payback, and how do we establish that we've used it correctly in order to get the forgiveness?
Well, what's the insight here? Michael, Randy, Lisa, what are we hearing? Is there a round 3? Is there a round 4? What you know, and what does this mean in terms of the future of retail in New York? You know, for guys like Ken Gidden, who may be back on their rent, you know, and if you don't have a relationship with your landlord,
Right.
You're cooked.
So Rob, we've done, since phase 1 reopening, I've done personally 14 commercial corridor walkthroughs, and we're doing 2 a week at this point. So here's I could sum it up with three things. Number one, these businesses need grants, not loans. That's really what it comes down to. So the structure of any other stimulus really does need to change. Secondly, is they need real rent relief. So, you know, we're talking 74% of our businesses surveyed indicated that it's their biggest issue. We've got 40% of our businesses that owe some sort of back rent. Throughout April through July, only 1 in 5 landlords were offering rent concessions. So there's clearly a disconnect between commercial tenants and commercial landlords. The third thing is small businesses are saying, hey, look, this is not the time for overzealous enforcement. There's a lot of new changing regulations. Different industries have different issues that they're dealing with in terms of reopening, restarts. You know, we don't need to be hit over the head with fines and violations. What we need is a partner with government that's going to help us through this process. So these are the 3 things that always bubble to the top in almost all the businesses that I speak with. And there are certain corridors have very unique challenges, like the amusements of the boardwalk businesses in Coney Island, or the businesses on Montague Street, which, you know, saw a lot of their residential base leave and the courts closed down. But for the most part, those are the 3 things that businesses are saying today in terms of these are the challenges and this is what we really need.
Michael, I hate to say this, but I'm going to say it out loud. Can we take a page from another city that has a robust grant program, that is doing something creative? Can we put something in front of the state capitol, or dare I say City Hall, to be much more active and engaged in what Randy said about getting grants in the hands of our small businesses? And how would that be done?
Yeah. So I think Randy's spot on. So we've launched. So Chicago's a really good example. Chicago, we've launched a grant program specifically targeted for industries and demographics that were hurt the most, and in places in the city that need the most investment. And I think Bill asked the question on the chat, which is, should we use places like Chambers to deliver? And the way that this is the systemic shift that needs to happen, which is we've said 100 times that the delivery system is broken. And this is a last mile problem, right? You're taking a standardized product from the SBA that looks the exact same whether you're delivering it in New York City or Omaha, Nebraska, and you're using a national delivery system that doesn't know how to get to the small businesses who need it most. And therefore, the small businesses who need it most are being put last in line instead of first in line. And so what we've done in Chicago, what we've done in Columbus, Ohio, is equip the organizations that have proximity, that are closest with the entrepreneurs, the small businesses who need the capital the most. We equip them with the standardized technology and the product and the process to bring a business in, and then you centralize the underwriting components, the capital raising components, something that the local organization doesn't need to do. But this is about solving a last mile problem. And yes, we need to take this approach over the next 6 months in solving this last mile problem. But I'm normally not the pessimist, and I hate to be the pessimist in this group, but there are going to be a lot more crises that we're going to have to be able to deliver capital to people who need it the most. And if we don't fix the pipes, the delivery system, and we're using the same old, we're going to continue to run into these challenges again. And so now's the time to rebuild that ecosystem.
Jeremy, I'm going to take a pause for a moment and see if there's folks from the audience or others who want to pipe in at this point. We have about 10, 15 minutes left. I don't want to monopolize the time on this. There's one question here from Adela who says, are there any accountability measures built into the program? I guess. Anyone want to deal with that on the accountability? Michael?
So from the small business perspective, Ken talked a bunch about what you needed to comply with to have the loan forgiven. From a lender perspective, those organizations, they need to be in compliance with those regulations, but there were not accountability measures around who you could lend to. So there are no targets around demographics or size of business or anything like that.
I have someone who has said, how do we fix the pipes? What does it entail? Michael, you early on said that, you know, the city should be the lead on this and bringing the financial organizations together up front in many ways to serve the grout up front early on and get money out while people waited. We saw this movie before, haven't we, with other you know, crises in the city. I think of Hurricane Sandy quickly. Yeah,
I can start. I'm curious what the people closer to the ground think, but it's like Uber, right? If you're trying to solve a national transportation issue, you're not going to create 6 big buses and try to transport everything through those buses, right? It's the cars on the ground who are closest to the people who you're picking up. That's who you need to empower and equip. And we have a couple people on the line today who are the chambers that deal with, you know, thousands of small businesses a year who know those small businesses. And if we can equip them with the tools to actually deliver those products to the businesses that need it the most, that's the solution.
I mean, Rob, yeah, go ahead, Lisa, go ahead.
Sorry, Randy. I know that to your point, one of the things the city council now is pushing, and we're going to be doing our damnedest to get it done, is to develop a way to do equitable distributions of any grant or loan programs that enter our city. Because I think that's the disparity falls in that these communities really have areas, and I'm going to point to the Yankee, the buildings, the businesses that surround Yankee Stadium are all closed. You're talking about approximately 100 businesses that have 0 income, yet they're the ones who actually do not qualify for anything because they're bars and restaurants that have no foot traffic and they have not been assisted in any way. So I think some sort of law that's looking at fair distribution, equitable distribution by borough, at least for the city of New York, is probably step 1 in that direction.
I mean, I would say 2 things. Number one, so the Brooklyn Chamber actually created a CDFI in 2017, but we're too small. We were too small to participate in this program. That being said, we did a crowdfunding campaign for Bring Back Brooklyn Fund. We raised $750,000 on our own. So we're able to do some micro lending. So there's some disparities even within the CDFI world, you know, that we couldn't necessarily qualify, but a larger CDFI. So we partner with very well, actually get the lion's share of CRA funding from the major banks and others. That being said, you know, I will say we have to address issues, particularly in immigrant business communities and others, about just informal processes, right? A lot of businesses didn't qualify because, you know, some of them were cash-based businesses. Some of them didn't keep accurate payroll records, right? So this is building the infrastructure in a way that actually helps these businesses to grow and formalize as a business. And I think to do that, you got to build trust in these communities. And chambers can do it in some cases, but in other cases, you know, there are other local businesses, community-based organizations on the ground that you could partner with and kind of make that happen. So, you know, I agree with Michael that there needs to be systemic change and a systemic approach to building that capacity within these communities, so that when we hit this next crisis, they're in a much better position to kind of weather the storm.
Randy, you have built out, you have the Business Solutions Center, you have CDFIs, you're involved in the loan and grant programs. Are there lessons learned from what we heard from Michael opening up about I'm going to just say it out loud, the Bronx getting shortchanged, and then a multi-million-dollar program where they get a 1% piece of that?
Yeah.
There's something wrong here on the delivery system. And, you know, and if we don't build the community-based organizations to do it,
yep,
it sounds like, you know, forget the feds. You know, even our local entities are not delivering.
Without a doubt, Rob, you're 100% right. And I think it's selecting the right partners on the ground. You know this better than any of us, that they're not all partners are equal in terms of how they sort of approach this work, right? And in some of these communities, if you don't have that trust established, you're not going to make any inroads. So even a chamber like us, borough-wide, we're not necessarily going to be able to touch every business in Brighton Beach because we just don't have those formal connections to that community. We'd have to go through a partner, right? So our role would actually to help build the capacity of the partner to deliver the services on the ground, right? That's what I see our sort of role in terms of that organizing entity.
We have about 5 minutes, left in this. You know, Ken, I want to bring you back in. I read from an article that one of your favorite quotes is from the hockey great Wayne Gretzky, and it says, "I don't go where the puck is. I go where the puck is going to be." Where's Ken Gidden going in all of this? How are you surviving, and what is it that you're doing that could be a lesson learned for other small businesses?
Well, as we all know, you know, COVID has been an accelerant to any problems or changes that were happening in New York City. So, for instance, in my situation, I signed a lease like 7 years ago, expecting business to accelerate, and we were probably a little behind on where I thought we were going to be. And then when COVID came along, now all of a sudden, our lease and our rent was a little bit, well, the problem was made much worse. And so then we reached the point of, does the New York lease make any sense? So there's so many problems like that, in the sense, like my business, we're very much a hands-on kind of business. So we were less of an e-com business. Now that was a mistake. So there's another situation where we were forced to get better at e-com. So, you know, there's so many things that I think, well, what's Rothman's 2.0? And then I decided what's Rothman's 3.0, because we probably did 2.0 in 2008. So we have to fix ourselves again. And I'm thinking, you know, maybe we need a smaller footprint in New York City. Maybe my store is 11,000 square feet in Union Square. It's a huge store. Maybe we don't need that. Maybe the business has changed so much. So, you know, I think New York is going to be very different. Retail stores like myself have to become showrooms, in a sense, for many of the brands that we work with that have online presence. You know, the whole vendor to retailer relationship has to change. And people, you know, New York City is going to change dramatically, I think, in the next year or so. And, you know, I see so many of the people that I know from the suburbs just aren't coming back for the next year. And I'm trying to think, what is that going to look like? Where's the puck going to be? And I think it's important for people, especially in Manhattan, to understand that Manhattan, I think, is going to be recreated as a young, very young person city populated by hipsters and young people that are going to be, you know, kind of intrigued and excited by a city that is very, very different.
Other thoughts on this, Randy, Lisa, Michael, as we wrap up on final
I mean,
thoughts?
some businesses have started to adapt, right? So just take restaurants, for example. Restaurants that stayed open during the shutdown and perfected their takeout and delivery operations were in a much better position to survive once they were formally allowed to do outdoor dining, right? Because now takeout and delivery, for example, is a much bigger percentage of their ongoing revenue, right? So that's one example. The other thing is, in terms of some of the really small businesses that we deal with, the ones in the immigrant communities, just moving to contactless payment and point of sale devices was a huge shift for them. They had never done that before. But going forward, that's going to be not just an important part of their business operations, but it's actually a health and safety issue right now as well. So there are things that businesses are doing on the ground to adapt. And I think, you know, insofar as we're in a position to kind of communicate best practices across the borough, across the city, then that's part of our role.
Lisa?
For us, I think we're looking at encouraging and working with businesses across the Bronx that have a major digital divide. And that is something that has come front and forward. So we will be focusing on assisting businesses and bringing to them the opportunities that come with having a social media presence, a good website, allowing them for opportunities to get creative with their businesses.
Michael, if you had a magic wand and they listened to you at the SBA and they were looking to recreate this, you talked about the delivery systems and we talked about rules and regulations that hamstrung, you know, many of our communities. What would you do?
I feel like the other ones were softballs. That was a tough one. So the first thing is, the bad news is that, you know, this has shed a light on the inequities in our small business ecosystem across the country. The good news is that this has shed a light on the inequities of the small business ecosystem across the country, and it's time to rebuild. It's time to rebuild from the top down at the SBA. How money gets to small businesses, that's number one. Number two, I showed earlier the big capital gap for startups. We need to make sure, we talked about grants earlier. Another word for grants is equity. We need to make sure that startups who are opening today and see the opportunity at a record rate are getting the money that they need to grow and sustain. And we need to make sure that the people who are historically disenfranchised are getting that capital and are first in line instead of last in line like they always are. And then for the businesses that are looking to grow, it's not just about the Paycheck Protection Program was a nice way for the government to avoid paying additional unemployment checks. It's just as cheap. It's just for paychecks, right? What you want businesses doing in cities is investing. And we need to make sure that any additional program that is going to small businesses is going to ensure that they invest in their communities and invest in the growth, and that we're focused on growth sectors in New York City and across the country so that we can actually rebuild our economy and rebuild our small business ecosystem so that it's better on day one after this crisis than before.
Final word. Jeremy, close us out. What a great discussion and a panel.
Yes, thank you so much, everyone, for joining us. There was a lot to digest here, and I think we had a lot of action in the chat, questions about the on the ground and on the whole. But I think there's a lot of room for change, and I appreciate everyone taking their time out today to join us. Thank you, Professor Walsh, for.
I see a Columbia SEPA case study on this issue, and I want to thank everyone, one, for coming prepared and coming with their A game. I need to go where the puck is going. Thanks, everybody. Have a great day. Thank you very much. Keep working out there. Keep the momentum. Thanks.